and welcome to Realeconomy. A year on from the start of the pandemic and lockdowns across Europe, we're asking, what do the EU's recovery plans really mean, not just for small businesses, but for Europe's financial markets? Coming up, Guillaume Desjardins is in Slovenia, where the EU Shore Initiative has been helping keep people in work.
These restaurant owners had to close during the first lockdowns, but were able to maintain their staff afterwards. And I'm about to go tuck into one of the finest pizzas.
But first, here's your crash course on how the EU's multi-billion recovery packages are financed.
The coronavirus pandemic has shaken Europe's economy. The EU Shore and Next Generation EU recovery packages are helping countries build more resilient economies. To fund them, the European Union is issuing up to 850 billion euros in bonds over the next 5 years. Borrowing at a European level means that all EU countries' economies get a helping hand. It's the first time the EU is borrowing on such a large scale, making it the new big player in the sovereign bond market. And this helps underpin the international position of the euro. The EU's high credit rating plus ability to guarantee the debt means investors are more confident buying EU bonds. They include social and green bonds, meaning the funds serve a truly social or green objective and will be repaid by 2058.
Well, around 2 million businesses have been able to keep on their employees thanks to the European Commission's Shore Initiative. Slovenia is one of 18 countries benefiting, receiving more than €1 billion in emergency loans. Guillaume Desjardins headed to one of the capital's pizza restaurants where, despite a new lockdown, is still open for orders.
After living in the United States, Greg Jerkovic came back to his native Slovenia in 2010 to open a restaurant, then another in Ljubljana. A year after the opening of his second restaurant, Greg had 30 staff. Then came the pandemic and lockdown, with his workers at home for 6 weeks. But Greg wanted to hold on to his staff and their skills for as long as possible.
The point was we had to keep these people employed for a variety of reasons. Again, our obligation, but also in case we open, what happens if these people are let go? How do we maintain continuity of the business?
When the restaurants reopened, you were available right away and ready to work?
Yes, of course, especially with a company who's helping you, so it's easier to go back to work immediately. So.
The Slovenian government subsidised employers like Greg to keep their staff on the payroll until reopening, partly thanks to the EU Shore programme.
As well as Greg's waiters and cooks, in the 18 countries which received Shore funds, it has helped 25 to 30 million workers keep their job during the pandemic.
The goal of Shore was to protect jobs during the crisis. The next step is the EU's recovery plan, known as Next Generation EU, which is set to follow in the coming weeks. This time, it won't be 100 billion euros, but as much as 750 billion euros in grants and loans distributed to EU countries. The Shore Initiative is being funded by issuing EU mutual bonds on a never-seen-before scale. The funding of the Next Generation EU programme will be more diverse, but will also be largely funded by issuing bonds at an EU level.
We expect that for each euro we spend, we'll be able to get 2, 3, 4 euros back within 5 or 10 years, depending on investment choices. This loan naturally will be paid off through increased economic growth, but also through new forms of taxation that the EU is currently bringing to the agenda. We'll wait to see what the next EU budget brings before worrying about that.
Thank you very much. These EU bonds are public debt, but not that of individual EU countries, of the European Union as a whole. You might wonder, well, isn't the EU the sum of its member states? Yes, but borrowing under the flag of the EU reassures investors. It also means that all EU countries get to benefit from the recovery in a more even way.
It also allows for reduced interest rates and for lower recovery costs. The demand for Shore bonds has so far been over 10 times greater than the supply, which bodes well for the Next Generation EU bonds. They are set to be issued as early as this summer if the European Commission gets the green light.
Well, to talk more about the EU's borrowing to fund those recovery packages, I'm here to speak to the European Commissioner for Budget and Administration, Johannes Hahn. Commissioner, thank you very much for being with us on Realeconomy. And when do you see the Commission starting borrowing for the Recovery Fund?
From our internal point of view, we are ready by beginning of June. And I hope indeed, and there is nothing which is so far challenging this so to say, goal, we can start going to the capital markets at the beginning of the second semester.
You say nothing so far challenging this. There are, of course, two threats right now. There's the German court ruling that it's unconstitutional. There's Poland threatening not to ratify this. How serious do you see these threats to be?
I'm rather confident that it will be confirmed also by Karlsruhe. But first and foremost, it's important that they lift their reservation. And I'm also confident here that this will be done in due time. If you're in politics, you have to be optimistic. And usually I'm right to be so.
Now, the bonds issued for sure have been very successful. How confident are you that investor interest will continue for Next Generation EU as well?
All in all, there was a huge interest, and there's a huge interest because they also consider the euro and the European Union as a safe asset, as a safe haven, and this is very important in times like this. There's also apparently a strong interest to create, so to say, an alternative to the dollar, not in a way to compete, but really to have alternatives.
What's the impact of this on the international role of the euro?
Well, I think the impact will be a huge one. I mean, we will issue at least more than 800 billion in bonds denominated in euro, and this is in a magnitude we never did in the past, and this will have certainly a huge impact on the role of the euro also at the capital market worldwide, will strengthen the euro as a real alternative currency, and that's why it has also a very strong economic but also political impact.
Commissioner Hahn, thank you very much for your time. Thank you very much for being with us here on Realeconomy.
You're welcome.